Bitcoin has unfortunately broken down from a key support level within its significant S&E channel. This development calls for increased caution as it raises the possibility of reaching our lower price target in the coming days. But why does this S&E channel hold such significance? Primarily because it has been consistently respected. The recent rejection we've witnessed occurred precisely at the channel's upper boundary, leading to Bitcoin's current consolidation around this level. Consequently, a decisive break below this well-established channel is definitely a bearish signal for Bitcoin's price trajectory. Now, let's examine the situation without the logarithmic chart. Surprisingly, or perhaps not, Bitcoin still appears to be trading within an S&E channel. However, it is important to note that the channel's upper boundary, in this case, hasn't been perfectly respected, with a slight deviation observed at the top. This is why, to be completely transparent, I prefer utilizing the logarithmic chart as it aligns more precisely with Bitcoin's price action. Therefore, it is crucial to delve in the corrective structure most likely unfolding on Bitcoin's chart. This structure, known as WXY correction, is a more intricate pattern, but I'll guide you through its complexities. The downward rejection from the channel's top appears to be a three-wave price structure. The initial move down represents the A wave, the subsequent consolidation forms the B wave, and the final push downward is the C wave. Collectively, these waves constitute the first leg down, or the W wave, of the larger WXY correction. The central structure itself is another ABC correction. The initial move down is the A wave, followed by the B wave consolidation and culminating in the C wave. These waves together form the X wave of the overarching WXY correction. Examining our recent price action, we observe a similar pattern. We have an A wave, a B wave, and the potential formation of a C wave. These waves are expected to complete the final corrective move, the Y wave, of the broader WXY correction. Now, let's pay close attention to a crucial detail. Using the Fibonacci extension tool, we can measure the potential price target of our C wave. We start by selecting the swing high, which marks the beginning of the W wave, then we click on the low of the W wave, and finally click on the high of the X wave. This provides us with significant price targets for our final Y wave. As you can see, the 0.618 Fibonacci extension level has been reached, marking a theoretical first price target for the Y wave. However, we can't definitely conclude that the Y wave is complete, as we haven't observed any significant reactions yet. Should Bitcoin's price begin to rise in the coming hours or days, it would increase the likelihood of the Y wave and consequently the entire WXY correction being finished. Later on, I'll pinpoint the exact level that needs to be breached for us to become even more bullish and anticipate a new all-time high for Bitcoin. Stay tuned for that crucial insight. Additionally, we can analyze the time duration of the WXY correction using the trend-based Fibonacci time tool. Let's start by measuring the length of the W wave. We simply click at its beginning and double-click at its end. We observe that the X wave slightly exceeded the 1:1 Fibonacci time level, topping out roughly between the 1:1 and 1.618 levels. This suggests a similar pattern may occur in the final Y wave of the WXY correction. So now let's measure the X wave's duration using the same tool. We click at the start of the X wave and double-click at its top, which coincides with the beginning of the final Y wave. Notably, we've already surpassed the 1:1 Fibonacci time level. This, coupled with the price action relative to the Fibonacci extension levels and the break below previous lows, which indicates liquidity absorption, strengthens the probability that Bitcoin has established a bottom at this area. By the way, you can trade with us by getting limited time bonuses using the links below, and there are 3 very good options ready for you. To confirm a bullish outlook, we need to see a clear demonstration of strength, specifically breaking through key resistance levels to the upside. The first resistance level, while not as significant as the one I'll reveal in a moment, is the newly established daily level. Let's switch to the daily time frame and apply this level on our chart. As you can see, Bitcoin's initial resistance lies at $68,400. However, there is another crucial level we can identify using Fibonacci retracement tool. By drawing it from the previous swing high to the swing low, we can observe a close alignment with our fresh daily resistance level. This is the first level to be aware of, but not the most crucial one. The most significant level is a diagonal one, revealed by drawing a descending channel on our chart using the parallel channel tool. Connect the previous highs and extend it toward towards the previous low. Notice how Bitcoin has very nicely been trading within this descending channel. A decisive break above this channel would be a major bullish signal for Bitcoin, potentially paving the way for a new all-time high in the near future. However, let's consider an alternative scenario. What if, instead of an upward move, Bitcoin descends towards the lower target of the Y wave we discussed earlier? This could happen if the Y wave hasn't actually completed yet. Remember, it is crucial to have both a bullish and bearish plan. If Bitcoin does move lower, it could pose a significant challenge. Not only it would breach important lows, but would also lose crucial support levels. The first casualty would be the highest volume cluster or point of control of the entire recent upward price action. By measuring the consolidation structure with the volume tool, we can see that the point of control sits slightly above 67,000 US dollars. Losing this level would be a bearish signal for Bitcoin, and we certainly hope to avoid that outcome. However, if it does occur, we need to be prepared for our lower target, which is the next Fibonacci extension level. This 1-to-1 Fibonacci level aligns perfectly with the daily support at 65,000 US dollars. We really don't want to see these targets reach, as it would mean losing both the point of control and the mid-level of this significant horizontal range. Given the confluence of factors, including the Fibonacci time analysis, liquidity grab below the previous lows, and the 0.618 Fibonacci extension level being reached, I'm inclined to see Bitcoin break above this descending channel and finally surpass its all-time high of 74,000 US dollars. Therefore, entering a long or a buying position at this area seems like a reasonable strategy. The entry point for this trade is essentially Bitcoin's current trading price, with a stop loss order placed slightly below the previous low. The target is a new higher high, and if we manage to breach that, then a new all-time high is within reach. Now, if you want, get yourself some free bonuses after initial deposit by clicking the links in the description, and thank you for smashing up the like button.